a robust 4.8% growth rate, and a commitment-basis fiscal deficit of just 2.2% of GDP, backed by sweeping tax reforms. The question on Business Focus tonight is, can this ambitious balancing act truly deliver stability and transformation? We have details of these and more lined up for you right here on Business Focus. And you know that Business Focus is sponsored by Telecel as well as EcoBank. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you'd always want to remember: *770#. Yes, *770# is a new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank. Now, before we sit straight on our topics for today, we'll take you quickly on a tour on how the various markets have been faring. On the foreign exchange front, the dollar currently will be bought from you at 10 cedis 97 pesos, sold to you at 10 cedis 98 pesos. The pound will be bought from you at 14 cedis 45 pesos, sold to you at 14 cedis 47 pesos. The euro, on the other hand, we bought from you at 12 cedis 72 pesos, sold to you at 12 cedis 74 pesos. I'll be guided that these figures will be much higher at a forex bureau near you. On the global commodity front, price dips across the board. Cocoa currently is at $5,440 per ton. It's lost some $17. Gold, on the other hand, is at $4,077 per ounce. It's down by $6.51. Crude oil is at $64.35 per barrel. It's trading as lost some $0.04 per on the market. And quite concerning activities happening there for a country like Ghana that depends extensively on returns on sales of such commodities. We hope things turn out right soon. On the Treasury bill front, the 91-day bill is at 11.02%. 182-day bill is at 12.66%. 364-day bill is at 13.08%. But still, despite the increase in the rates higher than inflation, government still is not able to meet its targets. Interesting developments right there. This is Business Focus here on TV3. We'll take a quick breather. When we come back, we'll sit and talk on our topic for today. Stay tuned. Welcome back to Business Focus here on TV3. My name is Michael Ogbodu. Just gone past was some tidbits on planning for your retirement by EcoBank. But then every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you'd always want to remember: star 770 hash. Yes, star 770 hash is the new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsors of Business Focus, as well as Telecel. We'll segue straight now into our conversation for today. Now, Ghana's 2026 budget, themed Resetting for Jobs, Growth and Economic Transformation, sets a cautiously bullish outlook backed by an ambitious fiscal discipline agenda. Following a period of economic recovery, government is shifting focus from stabilization to structural transformation, leveraging tax reforms to boost compliance and investor confidence. This growth is expected to be domestically driven, building on recent gains in agriculture and services. Crucially, government remains committed to fiscal consolidation, reinforcing its pledge to maintain debt sustainability. But can government truly deliver stability and transformation, looking at the target set? Well, in the studio to help us with the conversation for today's partner, Tax and Regulatory Services KPMG in Ghana, Gordon Adade, financial economist at the University of Professional Studies, Accra, UPSA, and senior fellow at Africa Policy Lens, Dr. Eric Boakye-Yadom. Now, chairman also of the Greater Accra Regional Association of Ghana Industries, AGI, Chonam Clemens Akpelo. Thank you, gentlemen, for your time. Thank you for coming in.
Thank you, Michael.
Thank you, Michael.
Thank you.
Awesome. So to set the ball rolling, first of all, we'll look at snippets of the finance minister's presentation last week, and then we'll come back in studio and then digest the conversation. So we'll take a look at that.
Government is therefore submitting to this House a bold package of VAT reforms that will make our tax system more equitable, transparent, and business-friendly. Right, Honorable Speaker, the new VAT reforms will do the following. We will abolish the COVID-19 health recovery levy. Mr. Speaker, we will abolish the decoupling of Get Fund and National Health Insurance levies from the VAT tax base. Mr. Speaker, we will abolish VAT on recognizance and prospecting of minerals. Mr. Speaker, we will reduce the effective VAT rate from 21.9% to 20%. Mr. Speaker, will raise the VAT registration threshold from 200,000 to 750,000 cedis. Mr. Speaker, we will extend VAT zero rating on the supply of local manufacturing textiles to 2028. Mr. Speaker, with the support of this House, Mr. Speaker, I'm proud to say that I'm happy to announce that today, COVID-19 levy is accordingly abolished. Mr. Speaker, by abolishing the COVID-19 levy, government is putting 3.7 billion Ghana cedis in the pockets of individuals and businesses in 2026. Mr. Speaker, these reforms will also reduce the cost of doing business by 5% as a result of subjecting Get Fund and NHIL levies to input-output deductibility for businesses. Altogether, the VAT reforms is expecting to give back nearly 6 billion Ghana cedis to businesses and households. We will institutionalize quarterly expenditure reviews. Right, Honorable Speaker, together, these measures will ensure that Ghana lives within its means, mobilize resources fairly, and spend efficiently. Fiscal discipline is not an end in itself. It is the bridge between stability and progress, between policy and real improvement in the lives of our people. Right, Honorable Speaker, years of inflation and weak oversight have drained real value from public spending. Too often, projects are overpriced, delayed, or abandoned because scrutiny comes only after money is spent. To fix this, government will establish an independent value for money office, a permanent guardian of efficiency, accountability, and fiscal integrity. Speaker, it will certify major projects before approval, monitor delivery, and evaluate results to ensure every city delivers measurable value. The office will enforce cost benchmarks, require public VFM certificate for contracts, and coordinate with the Auditor General, the Public Procurement Authority, and Internal Audit Agency to impose penalties for waste and fraud. Right Honorable Speaker, the Value for Money Transparency Portal will publish certified projects and citizen feedback in real times. Mr. Speaker, this reform will save up to 3 billion Ghana cedis a year, cut contract inflation, and rebuild public trust. Mr. Speaker, the Value for Money Office is not just another agency. It is Ghana's watchdog for prudent spending and real results.
So that was the Finance Minister on the floor of Parliament on Thursday delivering the 2026 budget. The theme for the 2026 budget is resetting for growth, jobs, and economic transformation. Gentlemen, briefly, I'll pick your thoughts. Do you get that sense from the theme of the budget? And what are your preliminary impressions of the budget so far? I'll start with industry. I hear a lot of you are very happy with the budget.
Thank you, and good evening to your cherished listeners. Yes, I'll begin by saying that the budget has been fairly positive and very welcoming to industry. Yeah. A lot of the things that we've advocated over the years have been captured. Okay, so for example, VAT, we've always talked about the issue of VAT. I mean, there has been a significant reduction, I think, from 21.9% to 20%. And for us, in real industry terms, that's quite significant. Of course, the issue of COVID-19 has been something that has been on advocacy table for so long, and finally, it's coming to an end. And so for us, it's really a great thing. But also, very importantly, we have to also look at the overall macroeconomic environment. I mean, for the past couple of months, it's been fairly stable. The CD has been quite appreciative over the against the major currencies. The inflation is currently, I think, about 8% plus minus. That's really monumental. And so overall, there has been fairly stability in the economy. Industry has been able to achieve some of the things that we are advocating for. The budget looks very promising. Issues around, digitalizing the VAT administration. I mean, these are things we've talked about, and we hope that they are able to implement it come next year. But I'm saying that if they're able to implement all of the great things that the finance minister talked about, I think that will go a long way to improve industrial fortunes.
Interesting. You spoke about the fact that you've called for the scrapping of a lot of these tax handles. And for the average consumer, the concern will be that it will translate into prices of goods and services and we'll begin to see that decline. I know you will respond to that later, but Doc, to you, how do you find this budget?
I think that it paints a picture of where we've come from and where we are now. And I should say, so far, so good. And many of the indicators were met by the government. There are a few of them that I think government need to work on, especially the tax to GDP ratio. I think it's quite below the recommended threshold. When you look at in the sub-region, we're expecting to do at least about 20% of GDP. And if we are doing something below 12%, which is around 11.1%, I think government faces a lot of challenge, may face some challenges in revenue mobilization. We know that the key challenge is the oil revenue didn't come as expected, and it fell close to about 50%. What government did well was the mobilizing of domestic revenue. Government did quite a good job in mobilizing domestic revenue. So
it's not like they had any option anyway.
Yeah. So we have been talking about broadening the tax net, and we are hoping that in 2026, government is able to broaden the tax net. Other than that, there will be a lot of challenges ahead of us. There are many things that this government is touting or projecting to do. The big push agenda, which comes with money, the 24-hour economy. So if we fail in getting the revenue handles correct, we will face a lot of challenges, especially we will see the economy responding to revenue shortfalls, like contracting, if we are unable to rake in the needed revenue. So generally, government should pay key attention to that. And even, I'm sure probably will come to the VAT restructuring and how it's likely to affect government revenue mobilization. You see, the reduction in a way is good. Obviously, nobody wants to pay more taxes. Even if taxes there, we'll all be happy. But on the other hand, too, if we reduce from 21.9 to 20%, what government is losing, how are we going to fill it? That is the question. My brother will be happy because tax rate has come down. But I'm thinking about a government who want to build more roads, a citizen who have a lot of demands. How do government augment it? And that is where broaden the base. So the tax will not go vertical, but rather go horizontal. And I'm here to see a concrete plan as to how we can broaden the base. I did not find that much, So government should find a way to broaden the base. And one of the things I was also expecting the government to touch on was, how does the reduction in the number of ministers actually save us money? If we look into the budget, actually it didn't have any effect. The reduction in the number of ministries to about 60 ministers.
Yeah.
It didn't really have any effect. So the idea that reducing the number of ministers will have effect, the budget could not address it. So it is really not about the number, but it's about the allocation and how you're able to ensure that you don't spend excessively on running the administration of the country. So basically, these are the few things that I...
Very critical questions. And, especially when government is hoping to increase domestic revenue by some 30 billion, if you're reducing tax handles, especially when empirical data doesn't necessarily point to the fact that when you reduce the handles, there will be uptake in the payments. But from your angle, Gordon, how do you see this budget?
Well, thank you, Michael, and good evening to your cherished viewers. So I believe that this budget is actually building on a consolidation of the current gains that we are seeing in the macro environment. You see that all the macro indicators are trending, in the positive direction. If you look at inflation, as my colleagues have said, inflation has moved to about 8% now. And all that. If you look at exchange rates, we are around 16% today. You know the story. So when you look at even the reforms that are coming in terms of VAT, that is, for me, is laudable. We need to commend government on that. But point is, how the implementation will be done as we move forward. But when you look at VAT, currently, before the budget, KPMG, we went ahead to do what we normally call the pre-budget survey. And we do this before budget because we want to see what the businesses are expecting and how the current budget, 2025 budget, has performed. And during that survey, we try to ask questions about what has been the effectiveness of tax policy and what, in recent times. One thing that came up strongly is the issue of VAT. And then, our businesses were saying that they expect the rates to go down, they expect some reforms. And then when you look at the current VAT architecture, you have a situation where you file close to about 4 returns depending on the business that you are into. So for a normal business, you do a standard rated return, you do the imported levy return, imported services return if you import services into the country. You also do the flat rate regime return. And then also the levies that you pay, the NHI or the GET fund, and then the COVID levy, you file those returns as well. And so if you look at businesses, whilst you have to focus your energy into productive business, you now have to be thinking about the intricacies of all the complex tax laws that you have to deal with. And as I said earlier, tax is very difficult. In fact, the famous Albert Einstein once said, the difficult thing to understand is the income tax. And so you need to consciously make sure that tax is very clear and easy for people to understand. And I believe that as we move forward in this particular reform, one of the things that I want to see is certainty, clarity in the tax regime. Now, if you look at the posture of the GRA and even the Minister for Finance, he did indicate that they are going to deploy technology to help mobilize revenue. So I would differ a bit to say that, of course, the rate is coming down, but there's also evidence that when you deploy these technologies to collect revenue, actually the tax revenue goes up. There's evidence from Uganda, there's evidence from Kenya, there's evidence from Italy. In fact, Italy,
when you reduce the tax
when they went to do the Fed,
Okay.
the fiscal electronic device, okay, when they introduced the e-invoicing in their country, they actually increased tax revenue, VAT revenue, by 2 billion euros in that particular year. In Kenya, when they introduced the Fed, revenue went up by 20%. So we expect that if this is properly implemented, if you engage stakeholders and everybody comes onto the table and we are able to do that, what we expect is that revenue should go up. So although today you are giving some, you are reducing the tax. And also when you reduce, once you reduce, what happens is that you are giving more disposable income, to consumers. And if consumers have more money, it means that they will want to consume. If you consume, it means that you are going to stimulate demand. And if you stimulate demand, production will go up, and then that should increase, of course, the cascading effect on increased revenue from taxes. So, you may say that there's no evidence, but if you look at the mathematics of it, once you reduce and I have more income, it means that what I couldn't buy before, I should be able to buy. One may argue that would, the businesses be willing to give the extra income to the taxpayer. But I can give you an example. Depending on where you are buying, if you buy at a corner shop, okay, sometimes those people may not be able to give you, the differences in the rates when it comes. Today, if you look at the exchange rate and all that, sometimes people may argue that why prices are not going down. But I bet you, if you go to the filling station to fill your tank, you realize that there has been some gains. Okay, and that gain will translate. So if you look at the VAT reforms that are even coming, if you look at the rates, for instance, they are saying that if your taxable, if your revenue is 200,000, now if it's 750, then you have to register. Anything below 750,000, you are not supposed to register. What does that mean? That means that any business that is operating, that's revenue is below 750,000, you are not supposed to register for VAT, and you are not supposed to charge. It means that if you buy from such a person, previously if they were charging VAT, today they will not charge VAT to you. What it means that there's still additional income going back to the consumer. Yeah. And for those people, you can't tell me that they will not pass it on because they are not charging VAT.
But on that also, there's a concern that if we are not careful, that could also weaken the macroeconomic gains that we've made because more money in circulation could also have impact on inflation. But we'll delve into that properly. But some have also argued that these macroeconomic indicators or targets for 2026 are not ambitious enough. Because if you look at how we fared this year as against the targets we set for next year, some have described it as very lazy, for want of a better word. Look at real GDP. As at 2025, Outran, 6.3% achieved. However, we are hoping to attain 4.8% for next year. Doesn't sound inspiring. Monetary policy, 21.5%. As we speak, we're already at that rate. So why aren't we doing more? Import cover, the target was 3 months or more. As we speak, we are at 4.8 months. Why can't we do more? Inflation is at 8% today as we speak. The finance minister indicated that it could end the year at somewhere around 6%. So why are we looking to end next year at 8%? Doc, I'll come to you. Do you also get that sense that maybe they are setting the bar low so they could easily meet it, like he did, especially in the mid-year budget, where he kept a lot of the indicators, even though as at mid-year we had hit quite a number of them?
I'm a teacher, you know, and I would, if we ask him to set a question and assess myself, I will set a question I can easily answer. So I think the government is being cautiously and being optimistic in a way that the government don't want to set a target that will also influence the decision to maybe look for alternative revenue that may lead the government into borrowing and all that. So the target is, I think, is very moderate one. And my concern is not even necessarily the target. You can set the target and you can cross the target. The target does not mean that you should necessarily operate below it, you know. So I think the government would be looking at how to exceed the target. But then I want to tie in again on the revenue aspect. You see, you are charging VAT you have moved the threshold from 200 to 750. A while ago, I was speaking to your sister station, and the problem that I see, in as much as it gives breathing space for micro businesses to grow, you know, the problem that I see is the competitiveness of these two different thresholds. So we are all selling at the same place. We are selling the same commodity. We are all selling forms. But I happen to be able to sell more. So I'm making a daily sales of about 3,000 cedis. So in a year, I'll fall above maybe the 750,000 threshold. I'm being told to charge VAT. my friend sitting beside me is selling less and is able to is selling less in the year, less about 2,000. So in a year, less than the 750,000. The person will not be charging the VAT. So a customer comes, I have slapped VAT on mine.
Yeah.
You know, so price sensitivity. You know, the person is likely to move from me to the other person, which means that in the broader sense, some traders who were somehow competitive or being able to sell more, now they are likely to lose that competitiveness because of price differentials. Now, the question is, what do I stand to get for charging the VAT? We can say that you can claim your input taxes and all that, but on the whole, how does the consumer perceive the two of us? You know, is there any advantage that I can get for charging taxes without making me not competitive, without making me lose my business? You know, so I think we need to be able to find a way to address that so that it doesn't bring a distortion to those that are selling. You see, if I
basically
realize
saying that there has to be a way to incentivize those who are paying the VAT.
Exactly.
Especially because it puts them at some disadvantage. However, some also argue, on the other hand, that if you are making in excess of 750,000 in terms of your revenue, then you're already enjoying economies of scale. So you can probably reduce your price anyway below someone who's making 20,000.
So what will happen is that the one who is selling below 750, he is likely to increase the price so that he will make the margin.
Okay.
But if the person decides to sell it lower because of the possible VAT differentials, I can look at the pricing and be able to price it so that it will give me a certain level of advantage.
Okay.
You know, so we need to find a way that this introduction will not affect necessarily sellers. And that was the argument the Guta president made a while ago when I had a conversation with him. So we need to be able to see the implementation of these things.
Jonah.
Well, look, the issue of the 200,000 moving to 750,000, the issue you just described already exists because it was 200,000. They've just increased it to 750,000. But it is in the interest of every business owner to move up the ladder. Every business owner needs to formalize and structure their business. If you are not paying VAT, there are many contracts you can't apply for. So it is in your interest to be able to pay VAT in order to have the clearance certificate needed to do bigger projects. Would you always want to be small, down there, informal? No. So there are clear benefits to wanting to grow your revenue and wanting to be formalized in order that you can do much more big contracts. I can't imagine you applying for even a government contract without paying VAT. You have to, because it's a requirement for you to be able to bid for those projects. So I think that it's a good thing because it allows a lot of monies that otherwise would have been paying as VAT. It allows us to have those money in our pocket as businesses. And then it opens up the economy more, where there are, more disposable income, for us to spend. And so really for us, it's a good thing for us in business. The only thing is that because the project looks so ambitious, we really want to see its implementation. You know, as a nation, we've got a big challenge with the implementation component of policy. So you see that the drafting of the policy, the thinking, the strategy always look beautiful. But when it comes to the implementation components, we have major challenge as a nation. So my brother talked about the issue of Italy and Kenya and all of that. They have been able to figure out properly how to focus on dealing with the issue of implementation of their budget. And that's why they're able to be as successful. For us, we have all lofty ideas, great ideas on paper. I've seen the issue of digitization and making sure that we integrate technology in VAT administration. Great idea. I'm keen to see, we are waiting to see how this is implemented because we know that in the past, all of these ideas are thrown around, but very little is achieved in this regard. So we will wait for the implementation in order that we can do proper assessments of the success of the budget.
We'll continue on the tax conversation when we go on break. But then your plenary thoughts on the budget entirely, do you think it's ambitious enough or is still playing a safe approach?
Well, I think that you also have to be fair to government. you have to appreciate that they are coming from a background. You know, the previous years, things hasn't been as great. You know, we've got CD to dollar rate about 17, and so on. And so for them to be able to bring it to where it is now, I believe that they would like to achieve some stability over time. So not only achieving stability, but consolidating their gains. So I'm sure they want to be more cautious in promising and just play safe, so that at least even if the worst happen, they can be at the same place. So, well, we give them the benefit of doubt and wait to see what happens in the implementation.
Sure thing. You're still watching Business Focus here on TV3 with me, Michael Ogbodu, and my guest in studio. We'll go for a quick break. When we come back, we'll bring you more conversations. Stay tuned. number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank, and sponsors of Business Focus as well as Telecel. But we'll still continue with our conversation on the 2026 budget and the tax policies that were introduced by this government. Earlier today, the Commissioner General of the Ghana Revenue Authority, Anthony Kwesi Sapong, spoke at the KPMG post-budget event, and he's been sharing his thoughts on what he thinks of the fact that could the reduction of debt tax handles really impact revenues on the government side positively. And also, he spoke about some AI technology that the GRA will be introducing at the ports to help improve revenue numbers. Take a listen.
You will notice that in the 2026 budget, the minister announced a bold initiative of reforming VAT. And VAT is actually consumption tax. The more we consume, the more taxes that we pay. But today in Ghana, the effective tax rate stands at 21.9. So that in itself inhibits consumption. If you take it simply, for every 100 Ghana cedi that you have to spend, about 20% is going to VAT. So that slows down consumption. What we believe is that by bringing down the rate, is going to afford consumers the opportunity to spend more, and that in itself will generate more revenue. And we've done the assessment, and as you might have seen in the budget statement, the minister talked about a tax neutral effect. That will mean that the reduction in itself, which is good for consumers and Ghanaians, putting about 6 billion to them in itself will not impact overall revenue generation. We've also been very careful to ensure that businesses can claim back the portion of VAT which was cost to them, about 6% of it. That in itself also is going to improve cost reduction, will improve profit, and the profit itself will now be subject to income tax. So in a way, we are giving off the VAT component to reduce costs, but at the same time, increase profit of businesses, and we take it from a CIT. So that again also gives us the opportunity. What it does is that growth will come through consumption, and through consumption, businesses' profit can grow, and through profit growth, we can also generate CIT. But also importantly, we are using technology to drive compliance. So in this country, we have a lot of laws, and that's the reason why government policy has been deliberate not to introduce new laws. With the use of technology, we're going to create transparency, we're going to bring more people into the tax net, and we're going to collect the correct taxes. This way, people who are not already in the net, or taxes that are not already coming in, they will come in through the use of enhanced technology. So that again will be an upside effect, which we believe that it will increase revenue. So we've done all the analysis, and we strongly believe that with all the measures that we've put in, using technology, using compliance, and engaging with the stakeholders with trust and transparency, government revenue will go up. So this, as I said, is a proof of concept as to whether the AI will work or not. So based on the samples that we've done, we saw that the upside of revenue was between 40 to 45%. So it gives us a great confidence that when we deploy the AI, the level of discretion that we are trying to minimize, we can do that. But it was not also only on the revenue side. The AI also does risk profiling, particularly for areas like narcotics or goods that are harmful for consumption. Again, the AI will be able to give us indication if there's a shipment or container that is carrying harmful goods.
So that was the Commissioner General of the Ghana Revenue Authority, Kwesi Anthony Sapon, speaking, basically saying that government hopes that by lowering the tax handles, it will increase consumption, and by that we'll be able to generate more tax from the spending. He also says that they'll be leveraging technology to make this happen. That's increase our tax revenue. Chonam, you wear a number of hats. You are a technology person, and you are also an industry person. What do you make of this?
Well, great idea and well said. The issue of introducing technology in enhancing tax administration, tax collection has always been on the table. Well, everywhere in the world, it's been proven that technology will naturally enhance tax administration and collection. But there are more critical issues we need to look at. Number one, what's the extent of technology usage among the people? I imagine that they are targeting the people at the bottom, the informal people, the everyday person, the market women, and so on. How many of them are using technology in their transactions? Ghana, it's a very heavy cash economy. We spend a lot of cash. So I'm keen to see how they are able to change attitude of all of these people who otherwise use cash, help them to use technology to be able to ensure that they are able to take taxes from them. So really great idea,
okay.
and I believe that by now they should already have the technology ready, because otherwise it will be difficult to now want to build the technology. So we are happy to see how this unfolds, but we are keen to see how they effect change. Change not only in bringing new technologies, but also the attitude of the people in wanting to voluntarily use technology in paying taxes. Okay.
God, I know you have followed this extensively. Yeah. How practicable are these suggestions or propositions by the GRA?
Yeah, so, as I did submitted in my earlier, points, technology really, if you are able to deploy, based on the evidence that we've seen from the other countries that have done this, it will really go a long way to support. In fact, when the GRA began the e-invoicing about 2 years ago, they themselves came out to say that, yes, it was working and revenues were coming in. But for some reasons, that project, we've not really seen whether it's on hold or not, because the target that was set in terms of onboarding clients, some of them have not been done. And I'm sure that that's why today they are saying that they want to move to the Fed. And I think 2018, Ghana passed into law the Fiscal Electronic Device Act that will help with collecting taxes, VAT, through that system. So it's been there in the Act for some time. As I did said earlier too, if you look at Kenya and Uganda and Italy and the other countries that have done this, some of them did this as early as 2003. And then they've been doing top-ups over time.
So we are literally late to the party.
Yes, we are late to the party. So what we need to do is we need to make sure that, like he said, the technology is already in place. It's not that we are going to build something. Also because we are late to the party, people have done it over time. They've made mistakes. They've made errors. So as we go, we have the advantage of learning from those guys, and then we can move faster. So I believe that once we are able to deploy the right technology, we should be able to bring in the revenue. Now, when you look at also data from the OECD in terms of tax compliance and what you can do to get revenue, they have some parameters that they measure. So, for example, if you do targeted risk audit profiling, if you audit based on risk assessment, you are able to also increase your revenue between 5 to 15%. Today, you have taxpayers who, for a long time, GRA may not go there to do audit. So within, maybe after 3 years, 4 years, then they are coming to audit. If you are able to profile these taxpayers and audit them on a yearly basis, what it means is that you reduce sometimes the challenge that comes with, interest and penalties also for this taxpayer, because sometimes the default is also because of understanding of the tax laws. But if you wait and you audit them 3 years, 4 years, the interest becomes so difficult. Right. So if you are able to audit them, on a yearly basis, then compliance will increase, and that should bring you some revenue, because sometimes when they go through these audits, you will see that they are uncovering other things that they have not seen.
So basically, a lot more legwork.
A lot more legwork. And also not to do manual audits, but we expect that technology again will come in to even do the profiling. And again, intelligence assessment. When you go online, for example, I expect that this VAT system that they are going to implement, when I buy at the shopping mall or when I sell, whatever I sell should go into my system. And I should see my sales, my output VAT in the system. It shouldn't be a manual process. Once you do that, I think we'll get some.
Sure, Doc.
Yeah. So I think that in introducing technology, we have to also should be inbuilt incentive for people to uptake it.
Okay.
Greater part of, especially when we talk about direct taxes, our income taxes, tabletop workers, artisans all over the place. You come and work in your house and you pay the person. Those guys are not paying taxes. They just take the money and go, unless the indirect tax that we all pay, that's what they pay.
Yeah.
So what system are we putting in place to bring all those guys to the table to contribute to the development? I think that it is simple. We need to we need to encourage people to use mobile money, not just encourage, but a certain incentive.
Sure.
Does it contribute to a credit score that when you go to the bank for facility, you can easily get? In that case, it will bring about a cashless economy.
Okay.
And one principle in tax, you can't tax a revenue that you can't see, you can identify. So by encouraging them to come on either mobile money or a certain form of payment system, you can identify their income. You'll be able to ask them to pay a reasonable amount. So I'm thinking that the AI or whatever technology they are bringing should bring all those informal sector onto the table to contribute.
Fantastic submissions. Final ones before we go. One of the things I was expecting to hear also was the exchange rate targets for 2026, because we didn't hear much about it. But I'll just ask you in one sentence each. 2026, what rate do you expect it to end? At the moment, we are looking at about 10.9. But in your estimation, ideally, Chunam, starting with you, what do you think it should end 2026?
Well, even if it's come to single digit, we'll be happy to see that.
Single digit, 9, you are fine with 9?
Yes.
Okay.
But look, our focus is really about...
No, you can't ask that question and answer.
So
obviously, we will have to explain.
Okay. We're out of time. So just one, where do you want it to be? Or ideally, do you think it can get?
If it's 10, it should be stabilized for a long period of time.
Stability, hopefully
so
single
we can
digits.
plan.
Okay. Chunam, Doc.
Exactly. It's not whether the fluctuation and volatility is what we want to minimize.
Okay.
It should be at a, so that we can plan it to also influence pricing. So,
okay. So I like the way you're avoiding a question.
I'll go for stability.
Stability. Okay.
Yeah.
Stability.
What we want is stability.
Well, I think at least if you look at what they're projecting with the macroeconomic indicators, we can be sure that stability will come. We are hoping that growth will also come as well. But gentlemen, thank you so much for your time. That'll be all for today's edition of Business Focus here on TV3. A big thank you to my guest in studio. I had Chunam Akpelo. He's the Greater Accra Chairman of the Association of Ghana Industries. Also with us in studio was Dr. Eric Boakye-Yadom. He is a financial economist with the University of Professional Studies, Accra, and with the Africa Policy Lens. Also Gordon Dade. He is partner tax and regulatory services at KPMG, one of the big 4 auditing firms. That'll be all for today's edition. For more business stories, please check out our website. It's 3news.com/business. I am Michael Ogbodu. Thank you for watching. As always, please stay safe. I'll catch you next week. Thank you so much.
Business Focus is to you by EcoBank, Telecel,